Welcome to another S&P 500 analysis. Today is November 13, 2022. In this video, we'll look at the ETF for the S&P 500, the Nasdaq 100, and the Russell 2000. And we'll establish some scenario for the coming week for these ETFs, so stay tuned. Now, before I begin, let me make some correction on what I said in my weekly market video on the economic reports throughout this week. The PPI is due out on Tuesday, and retail sale is due out on Wednesday. Originally, I said FOMC minute was due out on Wednesday, and that is not correct. It's the following week. Then housing start on Thursday. And here I also said the GDP is due out Friday, and that is incorrect. Existing home sale is due out on Friday. Now, I also post additional content on my Substack page, and if you'd like to see additional content from me, go check out my Substack page. The link is smtraderCA.substack.com. Here we're looking at the SPY, the ETF for the S&P 500. You can see on this huge gap from the CPI release. And here's the last week's weekly upper range and the lower range, and the price close outside of the weekly expected move range and close above it, well above it. And here is the coming week's weekly range here. And the upper range is between 413 and 407.90. And the lower range is between 389.16 and 386. As you can see, the upper range, the market seems to be pricing in to come up and target this trend line. And also the lower range is targeting near the gap of the CPI. And let's put the composite volume profile back. Where I basically have updated from this peak here to the Friday's price, Friday's close. And here are the zones that I identify, some of these high volume zone, and to me, some key level that I will be monitoring. And the upside scenario that I will be watching would be basically for the price to come up and get above this 400.86. If it could get up above this edge here, then we see it to come up into this low volume area, and that would put it up at the upper range of the weekly expected move. And if it get up inside of this range, then we could see it come up and tag the upper range, the upper edge of the upper range expected move, and that is also in confluence with this high volume node somewhere in the 413 level. And here's the downside scenario. We're essentially looking for the price, if it come back down below this 395.04 into this high volume zone, then look for a move down into this lower range of the expected move. And if you get below this 386 at the lower edge, then watch for the price to come down to this 382.30. And that would pretty much put this gap in play, the CPI gap in play. Looking at the QQQ, the ETF for the Nasdaq 100, also notice that there is this CPI gap as well. And the price actually closed above the weekly range, the weekly expected move, similarly to the SPY. And here's next week's expected move. The upper range will be between 299 and 296.90. And the lower range will be between 279 and 277.50. Also notice that the upper range is priced in close to this trend line here, this declining trend line. And again, the lower range, although it's not as close to the CPI gap as the SPY, but it's relatively close to it near the that vicinity. And putting back the composite volume profile between this peak to the latest price, we see that some of these zones here, and here are the scenario for the upside, basically looking for this to get above this 293.19. If we could get into this high volume zone, then look for a move up toward the upper range of the expected move. And if we get above that, then watch this 300.27 this high volume node here to get tagged. And for the downside scenario, we're essentially looking for the price to come back down and get into this balance area here by dipping below this 282.90, and watch for the price to come down and tag the lower range of the expected move and possibly work itself down to try to fill the CPI gap. Look at the Russell 2000 ETF, the IWM. We also see there is this CPI gap. But also in addition to that, the price actually came up and tested this declining trend line here. And from last week's weekly expected move, we see that the price closed above the upper range of the expected move. And this week, the upper range will be somewhere between 193.30 and 192.30. And the lower range will be between 181.50 and 180. Now notice that the lower range is actually priced in near the CPI gap here. And putting back the volume profile here, we see that some of these high volume zone and also this huge balance area right here between this CPI gap and to last week's opening. Now looking at the upside scenario, to watch would be for the price to come up to this 190.43, essentially come up to this high volume zone and see would it be able to work up inside of this upper range of the expected move. And if it could move above this upper range, then look for this high volume node here of 194.77 to get tagged. And here's the downside scenario. And for the downside scenarios, we are looking for the price to come back in to this balance area here and see would it come down and take out this lower range of the expected move and essentially try to fill this CPI gap. And there is this composite point of control here near this 180 area. And that would be a level to keep an eye on. So those are the scenarios for the SPY, the QQQ, and the IWM for the coming week. Be sure to smash that thumbs up to help me promote this video. Thank you for watching and stay safe.